Okay, good evening, everyone. Welcome to this evening's class. Please have a look at the disclaimer. Please read through it. Also, make sure that you go through the disclaimer and terms and conditions on the Unit of Prosperity website. Remember, we are not financial advisors. Everything we do here is for educational purposes only. Okay? All right, so let's jump into this evening's class. So this evening we will be doing part 5, and we will be covering the WXY and WXYXZ pattern. Okay. All right. So these patterns are very simple. I see Benjamin just joined us. Welcome, welcome, Benjamin. So the WXY and WXYXZ patterns are very simple. Some traders may classify them as complex formations, which is correct. But when I say that they're simple, is that they're not very difficult to understand. Okay. So what is a WXY and WXYXZ pattern? A WXY pattern is a double three structure. Now we'll get into the diagram in just a bit. Okay. Now it's also called a double correction. It is a three-wave corrective structure. When the WXY pattern extends, it can also become a WXYXZ pattern. Okay, so it first will start off as a WXY pattern, then it could extend into a WXYXZ pattern, and that is considered to be a triple three correction. Now, something that we need to also understand, these WXY and WXYXZ patterns can actually extend further. It's not a very common situation in many markets, but there are markets where you can find it's just moving in WXY formations, meaning it's just going sideways consistently, WXY, XZ, WXY, XZ, and it's just continuing like that. Okay, so that is something that you can also look out for. Now, the main rules for the double and triple three trading, the main rules for trading the double and triple three patterns, we look at the triple three pattern consisting of 5 waves. Okay, so it is a 5-wave structure. It is labeled as WXYXZ, where we have wave W, X, and Y could be any corrective pattern except a triangle formation. Okay, so wave W, X, and Y could be any corrective pattern, but it cannot be a triangle. Once you look at triangles, you're looking at ABC structures, you're looking at AB equals CD structures. Okay, you won't find a triangle in a WXY or WXYXZ formation. All right, so keep that in mind. Now, we have the X and the Z wave. The X and the Z wave could take the form of any corrective pattern, including a triangle. Okay, so when you're looking at the WXYXZ, wave X and wave Z could take on any corrective structure. Now, these are reasons why it would be considered a complex corrective formation. Okay, but as I said, it becomes very simple to understand as you go along. All right. Now, the triple three generally is formed horizontally, which means you're looking at ranges. You're looking at the price going sideways. You're looking at consolidation. Okay. Now, it typically does not dip very low against the main trend. So that is also something that you could look at to help you identify these potential patterns. They don't go much against the trend. They are very shallow. Okay. All right. What do WXY patterns look like? Look at this diagram. You can see here that we are in an uptrend. So this jagged line represents an uptrend. We get 1, 2, 3. This forms our W because remember, the W is a three-wave formation as well. And this is why it is considered to be a complex formation, because it is one corrective structure with another corrective structure forming X and another three-wave corrective structure forming Y. Okay, so you have 3, then you have 3, then you have 3, and this creates a WXY formation. When you're getting a WXYXZ formation, you get, after Y, you get another three-wave move. Okay, and this three-wave move, we consider it to be an ABC move. All right, it does not have to be perfect. It could be in 3 waves, then 3 waves, then 3 waves up. It could be 5 waves, then 3 waves, then 5 waves up. Okay, so it could be an ABC, it could be another WXY. So we need to pay attention to that as well. In some cases, you could see this wave very aggressive, which looks more like an impulse, but it is still an X wave. Okay, in some cases, we may even refer to this as a failed impulse. Okay, and failed impulse waves are very common in WXY formations. That is not one that you will really learn in many places, but I can tell you that it does exist. Okay, after spending a few years in the market, things start to become a lot clearer. Okay, so you could see this X wave as an impulse wave. Okay, it could be a very strong move in a lot of cases, and we look at that in some cases and say that we've been faked out. Okay, the market faked out. It spiked but did not continue. Or in some cases, we look at it, we say the wave was truncated. Okay, now this X wave could be ABC, could be any pattern formation. Then we get another 3-wave move with another 3-wave move and another 3-wave move. Okay, so this is a 1, 2, 3, 4, 5. So that's a 5-wave move. Okay, here you can see it is showing you that we broke these waves up. So you have a double 3, which is 1, 2, 3. This is not counted as the impulsive part of the wave. So this is 1, 2, 3 here. So this is what it's looking at as double 3. 3 down, 3 down. That's a double 3 in one direction. Okay, the one that goes against the trend of the correction is considered to be the X wave. Okay. Now over here you also have a double 3 as well. So these two double 3s can be considered W, X, and Y. And then you have W, X, and Y again. Okay. When you look at the entire structure, this entire WXY is one wave, the ABC is one wave, and this entire WXY is another wave, making this just a 3-wave corrective move. Okay. Now, the WXYXZ pattern. This is basically what it looks like. We have 3 down, 3 up, 3 down, 3 up, 3 down. Okay. So it is a very complex pattern formation. Yes, indeed it is. But it is very simple to understand. In most cases, we may want to allow this pattern to play out. But after getting three waves, which is in most cases at the end of Y or at the end of W, that is where we look to jump in. So at the end of W, which is 1, 2, 3 down, that is a complete corrective formation. Most of us will look to jump in at the end of W. The price starts to move up. It moves up in three waves, typically getting back to the high, and it comes down again. Okay? So when you trade these patterns, you need to be careful with it. If you get three waves down and you jump in at the bottom, you get an entry, you're going three waves up. Once it gets three waves up, you look to exit and you wait for a correction to enter again to go long if it's going to be moving up in a five-wave move. If it's not going to be moving up in a five-wave move, it will start to move to the downside. Once it hits the bottom again, you look to buy it up again because you're trading in the direction of the trend. Okay? So if it goes up in three waves, hits the top, does not go, you look to exit. It goes down to the bottom again, 1, 2, 3 down, you look to jump in again, take it to the upside again to try to catch the impulse. Okay, if it does not go and it hits the top, you exit. It most likely is going to pull back to the bottom, then you look for another entry, try to catch the impulse. Okay, the best parts of the market is the impulsive parts of the market, not the corrective side. The corrective side of the market is more or less something that we can use to help us identify where the market will be going next. Because the way in which the price moves is impulse, correction, impulse. So if you look at this, you will see this is an impulse move. This is the correction. This is another impulse. So it's impulse, correction, impulse. And if you look at this entire three-wave move, this is impulse. This three-wave move here will be correction. This next one will be impulse. Okay? Any questions so far, guys? Just drop your questions in the chat box. I'll be more than happy to assist. Any questions? Benjamin, what about you? Glenn, what about you? Kevin, Kimberly, Grace, Luke, Mark, Ricardo. Welcome, welcome, Ricardo. Welcome, Benjamin. I noticed everyone else was here a bit earlier, so welcome to you guys. I'm happy to have you. I see Kevin says no questions. Mark says no questions. Benjamin says thanks. Okay, so let's take it to our price chart. Can someone tell me which instrument you guys would like me to take a look at? Just let me know what instrument you would like to look at. We can look at pretty much any instrument of your choice. And we will look for WXY corrections or WXYZ corrections. I see we have Mark saying XAU, we have Kevin saying DXY. Let's start with the first one that came in. Let's see here. All right, XAU, no. Okay, yes, it is here. There you are. All right, so we have gold. I did have some markups here on gold where I forecasted the direction price was going to go. Okay. So let's move back a bit. Maybe we should use a different. 1 second. I'm going to use this one. Okay, let's look to see if we can find ourselves a WXY. This area looks nice. Let me just try to put in some Uh, okay, I guess I'm going to have to use, I don't want to clear out these drawings, but I guess I'll have to, so I will. I'll have to clear it out. Okay, we'll remove all of this as well. All right. We have a nice area here. Let me just put in some. This area right here. Who can tell me what you think it is? What does it look like? Anyone? What does this area that I just drew within, that I just put within vertical lines look like? What kind of structure does it look like to you? Mark says a range. That is correct. And where do you find WXY and WXYXZ formations? Look at the trend. The market is trending to the upside, right? Strong moves to the upside. So that is the trend. We have price correcting against the trend. Is this a deep correction or is this a shallow correction? What type of correction is this? Deep or shallow? I see Mark says shallow. That is correct as well. So how should we label this? Guys, I urge you not to try to complicate this too much, but instead try to look at price like you look at shapes, okay? You don't, yes, the construction of the waves are important to be able to analyze them in depth, okay? But it is good to try to simplify everything. So you try to simplify it just by shape, okay? And for example, I look at this as 1, 2, and 3, okay? And that is a three-wave move. As to trying to count if it's 5 waves in here, it doesn't matter, okay? It doesn't matter to me that much. I know this is a three-wave move. And once I see this is a three-wave move, I look for what's going to come next. I look at this, I see price made 1 up. This is 1, 2, 3. Right inside here, 1, 2, 3, another wave up. So I look at this and I say this is W, X, Y. I'll just use a different color here. I'll use yellow. See that? That is a three-wave move, okay? And this one here, this is also an aggressive move. As to whether it's a three-wave move or a five-wave move, it could be a combination of 2 three-wave moves to create this. It could also be a 5-wave move to create this, right? And with the evolution of price action, this is something we call alternation. That is where you get maybe your first impulse wave, your first impulsive corrective wave being a 3-wave move, then you get your correction, and the next wave is a 5-wave move, okay? This is a complex pattern formation. I also look at this and I label it as a WXY corrective formation. Okay, I see we have, I believe it was Jonathan who just joined us. Welcome, Jonathan. So I still look at this as a WXY formation. And I would label this entire wave. Okay, I'll use a 5-wave move to label this one. All right, so I'll label this one 1, 2, 3, 4, 5. All right, so this one is potentially a 5-wave move, as you can see. Now, after getting this 5-wave move, This would complete a big three-wave corrective formation, right? So this would complete a bigger three-wave corrective formation. And here you can see we're getting another push to the upside. This looks more like an impulsive move, right? Now with this looking more like an impulsive move, this could either be considered X, right? X in a lot of cases could be a three-wave move. It could also be a impulsive corrective five-wave move. Okay, so if I look at that and I want to label this, I can label this as a three-wave move. So I can label this as ABC, right? Sorry, yes, ABC. So label this as A, B, C. Okay, so I can label that as an ABC move just by looking at the shape of it. I don't have to get too technical and go into the actual wave construction. For me to do that, it would require me to drop down to a lower time frame to see things a bit clearer. Okay? But we don't have to overcomplicate everything. We don't have to overcomplicate everything. Just simplify it and go with what your eyes can see. Your eyes can look at it and identify it as a three-wave structure. So it is a three-wave structure. Okay? Just try to simplify everything. So this is a three-wave structure to the upside. So if this is WXY, this is making one wave. Then you got one, two, three again, WXY, making our second wave. Then you got a five-wave move down, making our third wave. You got a three-wave move up, making our fourth wave. Here we have an aggressive move down. Okay, so here we have an aggressive move down. And with us getting this aggressive move down, this is one more impulse to the downside. Now, with this being such an impulsive move to the downside, it could also be considered, just like this one being a five-wave move, this one over here could also be a five-wave move, right? And that could make this more of a flat type structure, a flat pattern. Okay, so this is one, two, three, which makes it more of a flat pattern formation. And if I had to label this, I could label this one, two, three, four, and this is five. Remember with an Elliott wave, five-wave move, the fifth wave could be the extended wave, the third wave could be the extended wave, even wave one could be the extended wave, okay? But in a more common scenario, wave three is usually the extended wave. Remember also that wave three is never the shortest wave in an impulse, okay? So here we have an impulsive wave, a three-wave correction, another impulsive wave. So this could be considered as well another WXY. Okay, let me just change the color of that. We could also consider that to be a WXY, which makes it more of a flat type pattern formation. Okay, now in today's markets, you can see these patterns become very complex. And in a lot of cases, patterns can actually tie themselves together. So you need to be aware that these scenarios can happen. You can find certain patterns that are simply parts of other patterns. Okay? So, for example, if I had to look at this from another point of view, I could look at this and say that I could be getting a pattern that looks more like this. We have one wave up, W. We have one, two, three down, X. Three up, Y. So this is three, this is three, this is three, right? Then we have this three wave down, and we have this five wave move down. So this could now come back, and I could say this is W, X, Y. Different color. And this type of pattern is considered to be a flat pattern formation. Okay? So a flat pattern formation consists of also three waves. As to how these waves are constructed, it is 3, 3, 5 in most cases, but in other cases, it could be 3, 3, 3 as well. Okay? So in a WXY formation, you can still see it as 3, 3, 5 to build a WXY formation, which in turn is a flat pattern formation. So I do my best not to get too mixed up with all of the names when it comes to corrective formations. I simply look at the shape. I look at the shape of the formations. Okay? And if you look at this, you will see, I'll just use a horizontal line. You will see that the price is basically just going flat. As you can see here, this is just flat. It is just ranging. Okay, if I use a range tool, that might be clearer. See this? The price is just going sideways. Okay? With the price going sideways like that, we know that the previous impulsive move, the previous aggressive move to the upside. So if we go sideways, we go flat, most likely we're looking to go up at the end of the correction. So all we need to do is identify the correction. And if we can identify the correction as WXY or as WXYXZ, or you can identify it as an ABC move, then that will give you the advantage as to when to get into the market. A lot of us believe that this move, this pullback that you're looking at here, let me just remove that. This first pullback that you're looking at here is a complete correction. It is a three-wave move. It could be considered, yes, a complete correction, but in most cases, because of its steepness, because it's so aggressive, we can look at it as just part of a correction. Okay? Just part of a correction. Once we get an aggressive move like this, we generally have to expect another aggressive move like that. All right? Now, the corrective part of the market could make things very complex because, as you know, corrective formations do evolve. Okay? For example, WXY could evolve into WXYXZ. Okay? They could also be built off of flat pattern formations, which could make it seem complicated. Understand? But at the end of the day, what you really want to look for is a three-wave move. You can look at this and you can see this is built off of three waves up. Okay, first we got three waves down. Then we got three waves up. Then we got three waves down, three waves sideways, five waves down, three waves up, five waves down. Okay? A lot of traders would not really understand what's going on. We need to also understand the time frames that we're trading in. You need to select your time frame in such a way where it allows you to see clearly when the price is pulsing. We are on the 4-hour time frame right now on gold. Okay, I'm just going to compress the price a little bit. We can see clearly where the trend is going. We can see clearly where the trend is going by simply selecting the correct time frame. If we go down to 15 minutes, it becomes a lot more choppy. As you can see, it becomes very choppy. Very choppy, very unclear. You're not sure exactly where you're going, what's happening. But as you start to go to a higher time frame, things start to get a bit more clear. As you can see, starts to get a bit more clear. We're in the 4-hour, and things start to get very, very clear. Okay, so you need to understand when you're trading what instrument you're using and what time frames your instruments move on, what time frames they trade from. Okay, And when I say trade from, you're looking at, the main market makers. What time frame are they using? The time frame that is the cleanest when you switch through your time frames, that is the one that they are using. So you need to do your analysis mainly on that time frame to trade in the direction of that trend. Okay. Any questions so far, guys? Anything you're not too clear on? Please feel free. Drop it in the chat box. I'll be more than happy to go through it with you guys. No one? I see Calvin joined us. Welcome, welcome, Calvin. All right, so not seeing any questions coming through. All right, let's look at this type of formation here. Let's drop down to the 1 minute. Right, so this is it right here. I'll just use a horizontal line just to show you guys what I'm looking at. Right, so this is what I'm looking at. The price is going flat. It is just moving sideways. So how are we going to deal with this type of price action? It may be a bit difficult when you look at it. Let me just try to make this a bit bigger. To some traders, it may be a bit difficult, okay? But it is good to allow at least a three-wave move to form. Here we can see that we have what looks very aggressive. We have this move coming down, very aggressive. Okay, on a lower time frame, it may be even clearer as to what's really happening in here, right? So we have price coming down very aggressive. So I can look at that as one. Okay, so I can look at this as one wave down. Price is moving up. I can look at this and say we got, this is 1, 2, and this entire move here is a three-wave move, right? So we got 1, 1, 2, 3, pulse up again. Okay, let me just take that off, and let's start over here. So we got 1 like that. So this is 1, 2, 3, an internal three-wave move, which is a flat pattern. Okay, so once you're able to identify your patterns, so we got 1, 2, 3. Once you're able to identify your patterns, it's going to help you a great deal to put your waves together. Okay, waves are mainly just bricks. It's like you're trying to build a wall or you're trying to build a house. You need bricks. If you understand the wave patterns, you can simply fit them together like bricks. Okay, so we got 3 waves up. We got 1, 2, 3. So this move down is a very aggressive move. So we got 1, we got 2, we got this one coming down in 1, 2, 3. We got a 3-wave move down. Okay, so we could label this like 1, 2. This is 1, 2, 3. But originally, we would have stopped this wave here, right? We would have stopped this wave here because we would have been looking at using a measured move, right? And this would have been just a flat pattern formation at this point. But instead of getting an impulse to the upside, we got a 3-wave move, right? So it is basically saying to us that this move down is about to extend to the downside in 3 waves, okay? So it's going to become an extended formation. So it extended down in 3 waves to this level. So this is one 3-wave pattern formation. Then we have another three-wave formation coming. 1, 2, 3. Okay, so we have another three-wave formation coming to the upside. Let me change the color of this. So we have three waves up, and now we have three waves down. Okay, you can see this 1, 2, 3. So this completes a bigger WXY formation, as you can see. I'll put this in yellow. Great. As you can see, we have another WXY. And what is this wave? Remember, your W could be any pattern formation, any corrective pattern formation, except a triangle. In this case, it's a flat pattern formation. That is just to show you how complex it can become. So it does not make sense to overcomplicate things. Just understand that you're looking for three-wave moves, okay? We may also find five-wave moves because we can find five-wave moves as part of an ABC move, part of a zigzag, okay? And ABC moves are also three-wave corrective formations, okay? So you got to keep that in mind. After getting three waves to the downside, a three-wave correction, look what happens. The price starts to move to the upside. Okay, so it's very simple. It's just a matter of understanding the pattern construction. Also understand that 3, 3, 3 in terms of wave count is very common, especially in forex, in commodities. You will find that you don't often get five-wave moves. You will typically get a lot of three-wave moves. The price moves very impulsive, corrective. Okay. So here you can see clearly at the end of our three-wave move, the price starts to go back to the upside in the direction of the trend. And what did we learn about the WXY formation? It is typically not a deep corrective formation. It typically runs flat. And you can see here that the price is just running flat. So this indeed is a three-wave corrective formation. All right, I'll give you guys a chance again to answer any ask any questions you like. In the meantime, let's jump over to the DXY. All right, so here we are on the DXY. All right, so let's see here. We're here on the DXY. I can just look at this and I can see so many different corrective formations. Okay, I'm going to touch on this one because this one looks very clear, right? If I'm to draw a little trend line on it, it may look something like this. And here's what I'm going to do. I'm just going to copy this trend line and place it at the top. See that? A perfect flag formation. If you're looking at traditional pattern formation, this would be considered a flag. Okay. What is the flag built on? The flag is built on a WXY or ABC type formation. So you have three waves up, W, 1, 2, 3. That's a flat, and this is a three-wave move as well. Then you got 1, 2, 3, another three waves up. This is a WXY formation. And as you can see, it's typically not a deep corrective formation. It is a shallow corrective formation. Excuse me. So as you can see here, we got WXY. And after our three-wave move, the price comes down. You guys see that? It is very simple. I know right now we're looking at it in hindsight, so it looks even more simple. But if we were to look at this in real time, right? If we were to look at this in real time, and you see prices coming down, you got price pushing to the upside, we got a strong move down, and prices pushing to the upside. We got 1, 2, 3 up. Okay? Price starts to come down correctively because this is a sharp move to the upside. So we won't expect that that would be all of the correction. It is a very sharp move. So with a very sharp move, you will expect another correction. Okay, so we did get another correction. Came down 1, 2, 3, went up 1, 2, 3, came down aggressively, most likely in 3 waves. So this completes a flat pattern correction. After getting the flat, we will expect the previous trend to push again to the upside, which is this 3-wave move. Okay, because this is the impulse of this corrective formation, this entire 1, 2, 3 wave corrective formation. You will expect this impulse to repeat itself. All we would do is measure this leg, project at the end of the X wave, right? And as you can see, if I'm to use that measurement, let's make this a bit bigger. I'm just going to measure so that you can see. It's going to be either exactly or very close in length. There you go. Look at that. Exactly the same length. Okay? So that is how you can project your profit targets as well. You simply measure your moves. And I also created a technique which I call market geometry. It's built off of measured moves. Okay? Maybe in our next class, we'll cover that, measured moves. So it helps you to be able to construct your 3-wave corrective formations, or your WXY formations, or your WXYXZ formations. Okay? Measured moves help you to project these waves. All right? So at the end of this 3-wave WXY move, we expect price to continue moving in the direction of the trend, which is down. Okay, and as you can see here, it did go down. All right, any questions, guys? I'll give you guys a few seconds to ask any questions you'd like. Let's take a look at another pair. So someone let me know if you'd like me to take at any specific pair, or if you'd like me to do any analysis on any specific pairs. What we can do is we can look to see if we find a WXY or a WXYXZ formation on any pair that you guys are looking at right now. I see Kevin is asking me, what direction do you think WXY is going next? Bearish? Question mark. Okay, so let's compress this chart a little bit. All right, look at this. Price is coming down. We made a low. I'm just going to draw a line on the low that we made, right? So this is the low that we made. We went up. This is a double bottom. We got push up. Make this bigger. 3 waves up. 1, 2, 3 down. 1, 2, 3 up. So this is a complete correction. So we got 3, 3, 3, right? So that is WXY. After getting WXY, what did we get? We got price coming to the downside. This looks like more of a corrective impulsive move, right? But look at this wave. This wave looks more aggressive than this one. Because this wave looks more aggressive than this one, what it tells me is potentially our correction is evolving. It is expanding. It is becoming extended. Okay, so this would be my first wave. This would be 1, or this would be W, right? And I'd look to see if we get a three-wave formation in the middle, which is maybe a flat pattern formation or another WXY formation. And this would be W, three waves up, 1, 2, 3. And this is most likely a three-wave move down. And this is a three-wave move up. I'll change the color here, right? So we have WXY, all right? This could still possibly push up a little bit, right? So, but this is generally 1, 2, 3. Now, this is 1, 2, 3 here as well. But I believe this is actually going to become a wave that is going to extend back to the downside, okay? You can have waves like that where they blend into each other, okay? So we have 1, 2, 3 up. I'm going to expect this wave to come back. I'll expect this wave to come back. Something like this, okay? So I'll expect that wave to come back to the downside. After that wave comes back to the downside, I will expect this wave to come back to the upside. Why? Because this is going to be W, and this entire wave here is X. This one will be Y. Okay, I'll use a different color. So we have W, X, and potentially Y will be coming to the downside again. Okay, after we get that, I'm going to expect one more push up, which is this one, pushing back to the upside, like this. And who can tell me what is going to happen after that? I'm just going to take this horizontal line, bring it to the high, and what do you see? Price is potentially moving sideways. It is moving flat. And WXY and WXYXZ corrections typically are shallow corrections. They're not deep against the trend. The trend is down. So these WXY and WXYXZ corrections are typically shallow corrections. Okay, so I'm going to expect that price will potentially come back to the downside, potentially give me one more push up before it continues down with the trend, which I'm just going to project this wave for the next move, the next big move as it relates to continuing the trend to the downside. It could come a bit longer than this one, but this is what we will expect. That price will come down to this level, bounce back to the upside, then start dropping in the direction of the trend again, as soon as this corrective formation is complete. I will not look at this as WXYXZ. The reason why I won't look at this as WXYXZ is simply because of how this wave is sharp. This wave is very sharp. This one is weak. So this can't be 1, 2, 3 like that because this one is too sharp. Okay? It looks more like an impulsive corrective move. And wave patterns are built off of impulse, correction, impulse. You can see this one here is also impulsive corrective to the upside. This one is impulsive corrective. This wave inside here is more corrective. So this will be a B wave or an X wave. So this will be 1, 2, 3, building a flat pattern formation. Okay, so this wave will be expected to repeat itself after this flat pattern formation is complete. Now, if this is going to be a flat in the middle here, a flat is built off of 3, 3, and potentially 5. So it could be 3 here as well, making it WXY, or it could be 5 waves to the upside on this third wave, making it a flat pattern correction. So if this one pushes up one more, breaks the high, I can now look at this and say this is 1, 2, 3, 4, 5, and I would expect price to come back to the downside. No difference. I will expect it to come back to the downside. After it comes back to the downside, I will now expect this move back to the upside, because it will still be missing. And why would it still be missing? Simply because this will be one, the flat will be our X wave, or we'd look at it and say our B wave, and then we get one more wave to the downside to create our Y, or in some cases you may want to look at it and say it's a ABC move. So we'll expect one more wave to the downside, okay? And then push up and the continuation of the trend to the downside. If the trend does not continue from this level after coming down, then going up, you can potentially see this pattern evolving into WXYXZ, which means instead of getting this impulse, we get a false impulse, false move, fake out, and then we get one more wave up. Then the price comes to the downside. Then the price falls, okay? And that would make this entire structure look more like this. This would be W. This would be X. Oops, I can't see the lines. Let me just fix this. So we have W, X, Y, X, and this would be Z. Let's just put the waves in. It would look, oops. Yes, it would look more like this. Let's change the color. Let's use purple. Let's make this thicker. Good. So we have W, X, Y. So this would complete our entire WXY formation. Okay. From here, W, X, and Y. That completes a three-wave move. And then we got wave 4 and wave 5. So you got 3 down and potentially 3 up, and then we drop. Okay, so I'll expect the corrective formation to finish on 5 waves if we are going to extend this into a WXYXZ formation. If not, I would expect the move down to start from the completion of Y, which means that we have one wave due to the downside, then another wave due to the upside before we complete this structure for more downside. Okay? So let's see here. Did I answer your question, Kevin? Kevin says yes, thank you. You're most welcome, Kevin. Most welcome. Okay, guys, I'll give you guys a few minutes. So if you have any questions, please bring your questions in. If you have any queries, please bring your queries in. If there's anything that you would like to know, please go ahead, submit your questions in the chat box. I'll be more than happy to answer. If not, if you guys have no further questions, we can call this evening's class to an end. Any questions, guys? Go ahead, ask away. I'm more than happy to answer. And gives you guys a few seconds. This way, if you're typing up your question. All right, I see Luke says no question here. All right. Anyone else? All right, I see Mark submitted something. Mark said, I'm trying to see these moves on different time frames, but my eyes are getting me. Okay, so Mark says his eyes are getting him. Let me just try to, let's go to the 4-hour time frame. Let's just remove drawing tools. Look at this. This is the 4-hour time frame. Which one looks clearer? Does the 4-hour time frame look clearer than the 1 hour time frame? Let's go to 1 hour. Which one looks best? Which one looks more clear to you? The 1 hour time frame or the 4 hour time frame? It all depends on the instrument. Some instruments move slow. The instruments that move slow, you need to go to a higher time frame. Okay? So when they move slow, you go to a higher time frame. It takes longer to complete your trades. Let's go to the daily. Right? So we're on the daily. What do you guys see? What do you see on the daily time frame? Let me show you what you see. You see 1, 2, 3, right? Then you see what looks more like 1, 2, 3. Change the color just so that you can understand impulse, which is corrective impulsive move, correction. Let's remove this. Right, so we have 1, 2, 3, which will be a corrective impulsive move to the upside. You got a correction, which is 1, 2, 3 against that move. And then we have another 1, 2, 3 to the upside. Right, so we have 1, 2, 3. Right, so we have 3, 3, 3 to the upside. After getting 3, 3, 3 to the upside, what are we going to expect? We already saw this as 3 waves. We know this is 3 waves. We're going to expect this move up to be 3 waves. Most likely, we did not expect it to be this long, right? It did become extended. Now, since it became extended in 3 waves, it could have been extended in 5. Okay, it could have been extended in 5, which is what it kind of looks like here. We've got 1, 2, 3, 4, 5. So it could have been extended in 5 waves, but I would like to look at this as a 3-wave move to the upside. And if this is a 3-wave move to the upside, this is WXY. If this is WXY to the upside, we can expect that we are going to get some sort of correction. And if that correction is coming, it could come down in 3 waves as well. Okay, so we have an aggressive move down, though it came down very slow. We are looking at this on the daily time frame. So this came down very slow. Okay, so this is one move down, and this looks like a 3-wave correction. This entire piece here, this entire structure looks like a corrective formation right here. Okay, but it's not very, very clear on the daily. But if we go to the 4-hour time frame, it becomes more clear. Okay, the visibility gets better, and you can look at this and say, all right, we potentially have, some sort of corrective move coming here like this. Right, so this is 1, 2, 3. This is a correction, this entire piece. And if we are to look at this from the perspective of a flat pattern, it is a running flat formation. We have a low, we got a high, we broke the low, did not break the high, and back to the downside. Okay, so we got to pay attention to the way in which the price moves. We got to pay attention to the pattern formations that we get so that we can understand what is going to be coming. This is an aggressive move to the downside. Because this is an aggressive move to the downside, we are going to expect a correction to come after it. And when a correction comes, we will expect another aggressive move like that to the downside. And as you can see, it came down aggressive. We got a correction. It starts to come down aggressive again. Okay, so we got aggressive move down, we got a correction up, we got aggressive move down. Okay, so this is 1, 2, 3. Okay, this is a very complex correction here, but it's a three-wave corrective formation. So we got 1, 2, 3 to the downside. Then we're getting another corrective formation here, right? And what is that corrective formation going to give us? This three-wave move, 1, 2, 3. I'm just going to project that and expect that to come after that corrective formation. So 1, 2, 3, correction, 1, 2, 3. That's what I'm going to expect. This one could also come down in 5 waves, okay? But if we go to the higher time frame, where are we expecting price to come? We are expecting price to come back to the low. We are expecting the price to come back to the low, possibly even break the low, then move back to the upside. Why? Because we have 1, 2, 3. It is a three-wave corrective formation, and we are going flat. And WXY and WXYXZ formations are corrective formations that are relatively flat in nature in comparison to the trend. Okay, and if we look at this, we got 1, 5 waves up, 1, 2, 3 wave correction, 1, 2, 3, 4, 5 waves up. So this is 1, 2, 3. Then we got a wave 4 coming here, and then we're getting potentially one more move up to complete a wave 5. Okay. I see Mark says, like we are. Ooh. Okay, I'm happy to excite you guys. I'm happy to excite you guys. Let's go back to the 4-hour time frame. So this is how we look at charts. You don't just look at a chart on the 15-minute time frame and expect that you will understand everything that's going to happen. You need to be able to look at the chart from the higher time frame and then work your way down. You will find a sweet spot in terms of the time frames, right? So in some cases, it could be the 4-hour, could be the 1-hour. In other cases, it could even be the 15-minute. It all depends on how fast the price moves. If the price is moving very fast, then you want to look at it on a lower time frame, like maybe 15-minute, 30-minute, 1 hour. Okay, if it's moving extremely slow, then you got to start upping your time frame so that you can see where you have impulse moves. Once you can identify your impulse moves, you will know where to expect your corrections to form. The corrections come after the impulse moves. So once you see an impulse, you look for the correction. If you understand what the corrective formations look like, for example, WXY, WXYXZ, triangle formations, flat formations, and so on, you will be able to get involved in a trade at the end of these corrective formations. Okay, it will give you a higher degree of accuracy as it relates to your trading. All right, guys. Well, I'll call this evening's class to an end. I will see you next time on our next class. Bye bye for now. It's been a pleasure having you. I'll see you next time. Bye bye, guys.